I have always lived my life by the mantra of like, okay, first of all, any of my predictions were irrelevant because we weren't making portfolio tilt or anything
Right.
based on them. This was just me and what I was thinking at the time. And two, I'll always say this, and anybody can challenge me on this if they want to, and then I'll just block you if you don't agree with me. But, um, I, my predictions are never really grounded in stupidity. I just think that, what I thought was going to happen didn't happen, but it wasn't because I was thinking like an idiot. And so my two big predictions from last year, I think I had some micro predictions thrown in there too, but the two were inflation and where the market was going to end up. So I was wrong in my prediction of where the S&P 500, because I was like, hey, it's going to be up 14 or 15%. So I undershot that by 10 points. But if you remember back in early 24, all the analysts that you were just mentioning, Jessica, were all calling for like single digit returns in the S&P 500. Everybody was saying like, hey, back-to-back returns. So my prediction of the market being up twice as much as what everybody else thought was a good prediction. I just didn't go 3 times as much as what everybody thought.
I think you get a pass on that one.
I think that's a break even. I think that's a break even. I was right in the right direction. So that's right. If I had said, hey, I think we're going to have down 5% year this year, I mean, that's totally wrong. So, right. Okay.
Right.
Now the inflation prediction was where I was really wrong. And okay, not catastrophically wrong. I think like Aaron, I probably owe you something on a bet here. And let's be clear, the sandwich bet, really Nate won the sandwich bet, but the reality is anytime Nate comes to the office anyway, we're buying lunch. So Nate wins the sandwich bet all the time. And so does Aaron. But so I said that inflation was going to come way down, and I thought it was actually we were going to have some deflationary readings in there. We didn't. It came down. I don't think my logic there was grounded in stupidity. I just really thought that the housing market, which is a huge component to inflation, was going to come down a lot more and impact inflation more than it did, just because they were, the supply and demand of housing with the interest rates higher was going to artificially bring down. What I got wrong there in hindsight, and this is probably the most valuable part of the comment I can make. Here's what I got wrong, which was when interest rates went up, I think looking at the data at a high level, people, okay, like me, I've got a 30-year fixed mortgage at 2.5%. So I'm not interested in selling my house and moving into something else with a 7 handle on a mortgage, a 30-year fixed mortgage. I'm not interested in getting out of the house that I'm in now and moving into a new house. So when the supply of something, housing, goes down because people aren't listing their houses because everybody's got locked into these 30-year mortgages, that keeps prices artificially higher than what I was thinking just from an interest rate perspective. I was totally wrong on that. Now, what do I think for next year?
Yeah.
It's kind of hard to follow up with, hey, I was wrong about everything, but here's what I think is going to happen.
Let's do it again.
Here we go. Right. Because it is kind of fun. And again, just to be clear, we don't take these predictions and embed them into our models or our thinking anyway. This is just like, people who are listening to this podcast are just listening to an everyday conversation that we're having at Monument. We just happen to be recording it today. So we talk about this stuff all the time, but I'm going to start off with an inflation expectation, right? So here's what I think for inflation this year. I suspect it's going to remain flat-ish at what I'll call like a new natural level. And again, mostly I'm going to come back to this mostly because the money supply is no longer contracting like it did after the post-COVID stimulus, or said another way, I don't expect there to be a resurgence of inflation. I think inflation lingers somewhat above target for 2025. So that's my one prediction. My prediction for the S&P 500 / I'll just call it equity returns, right? To me, there just seems to be a very supportive economic background right now for equities. And I see no reason to think that we'll have negative returns this year. But I suspect that after 2 years of plus 20% returns, that it's more likely than not we see more limited returns this year. Now, if I'm wrong about that and they go higher again, great, everybody wins. But I just think that we're in the single digit range, and guessing in the single digit range of where it's going to be, just like, it's kind of stupid because that's what everybody says, like, oh, somewhere between 1% and 10%. That's just the milquetoast response. So I'm just going to say, limited returns for this year, not negative. I suspect some of the sectors that had muted returns last year will play some catch up in 2025 as initiatives to deregulate are implemented by the new administration. I think small caps, banks, and energy, those are my predicted sectors and segments of the equity markets that are going to see better returns in 2025 than they and we saw of them in 2024.
Hmm.
As far as the economy, I think we're in a post-pandemic productivity-led boom. I just suspect that the economy will continue to be accelerated by the advent of consumer accessible artificial intelligence. I'm already using it almost on a daily basis just to research things and ask questions. And I think that's going to filter down into the economy if through nothing other than just efficiencies. And I don't see any reason to expect a recession until there is a reason to expect a recession. And right now, I don't see any reason to expect a recession. So that's another one of my calls. This one could be a little bit more controversial. I just don't think all these tariffs are going to ultimately make any real difference. I think there's a lot of bluster and negotiating and just art of the deal type stuff. I don't think the tariffs are really going to make a huge difference. I already went over inflation market expectations. I mean, I think we see the 2 Fed rate cuts that the market is expecting, although recently over the past few weeks, expectations for 2 have become more like 1, but I'm going to stick with 2 just because that's what I originally said. I don't want to, have some recency bias and change my opinion. That was my opinion, so I'm going to stick with it. Again, I think the winners for 2025 are going to be the undervalued sectors. I think deregulation is going to come really quickly and easily. So once the new administration's in office, small cap banking, energy, I suspect that we see some excitement there out of those sectors. I think we see interest rates. I think we'll see 5% way before we ever see 4% again. I just think that's consistent with a productivity-led boom. And my oil prediction, which I hate predicting oil because it's just a supply and demand function, but I'll take a stab at it because I think as it relates to oil's already pretty well supplied globally. I think supply will increase with deregulation, but so will demand. So I think that oil will stay in the $60 to $80 range, but that the oil companies will see profit growth with oil in that range because of deregulation. So 60 to 80. I don't think we see any sort of crazy oil swings. That's kind of it.
All right. You got a few swings there. So,
I learned from last year. So
toning it down.
give myself a gate that swings both ways.
There you go. Yeah.